A common question I get asked is who really needs life insurance or why do I need it? We hear a lot people say, well, I'm going to self-insure. I'm going to have my debts paid off and I'll have savings put aside and so I don't need to worry about it. And I think there's some common misconceptions about who needs life insurance and what it does. Oftentimes we hear people talk about life insurance as this thing that's just going to replace or I guess pay down a debt. You know, if I have a $300,000 mortgage, then I need to have $300,000 of life insurance. One of the most common misconceptions when it comes to life insurance inside of a financial plan is the role that it plays if the breadwinner of the family was no longer there. What we see in the industry is that life insurance is used to replace an income. In fact, if you don't have an income, but you have a large amount of debt, you wouldn't qualify for life insurance. A life insurance carrier would not approve your application because the thought process is that this coverage is put in place to make sure that, heaven forbid something happens to you, the family is okay financially. They call it a human economic life value. And depending on your age, it's a multiplier of your income. So for those who are in their 30s, their human economic value may be as much as 30 times their annual income. For those in their 40s or 50s, it could be as much as 20 times their income. And for those who are even in their 60s, there's still a human economic life value because average life expectancy brings us to about age 85. And if we pass away at 65, the reality is our spouse still hopefully has 20 or maybe even 25 years left in retirement. And there is an economic value that was lost from the person who passed away. So what we want to look at to decide who needs coverage is really, if you have someone you love, you have someone you care about, you probably need life insurance, whether it be your wife or your husband or your kids or maybe even some grandkids. But if there is a loss that a family would incur, well, there is a need to make sure that that family is okay financially. What we've seen, though, is that this is one of the most commonly overlooked aspects of a financial plan. In fact, I learned this was a statistic from the state of Utah. Utah has one of the highest demographics of families in the country. What that means is per capita, they have more families than almost anywhere else in the country. However, they have the lowest level of life insurance in the entire country. So more families, a focus on the family, and less coverage than anywhere else in the country. As an advisor, that's a concern for me because what that tells me is there are millions of husbands and wives and kids out there who wouldn't be okay financially if mom or dad didn't come home one night. And everyone always assumes, well, it won't be me. And I think if we all had a frank conversations with ourselves, we all know someone where that's happened. In fact, whether it be on Facebook or somewhere else in the newspaper, we've all read the story of the husband who didn't come home from work one day, and now there's a GoFundMe page set up at the bottom of the page that you can click on and donate the money. And as honorable as it is to help that family out, the reality is a $50 donation won't make sure the kids get to go to college or the house is paid off for 10 or 15 years. So the reality is, as we see it as advisors, if you have someone you love, someone you care about, the reality is you probably need to make sure that you have proper life insurance in place. And what we've seen is that the average person has far less coverage, if any, but far less coverage than they actually need. So one of the things that we really work on is to making sure people understand what is your insurable need and are you properly protected. If you're not sure, click on the link. Let's find out.